I'm King, and welcome to Frankly K, where awareness and clarity means power. So on this channel, I do financial literacy videos, vlogs, journal with me's, and book reviews. So if that's interesting to you, click the subscribe button and join the... I don't have a name. I don't have a name for this yet. So, today's topic. Bitcoin is on the stock market. Should you invest? Short answer, if you want. If you don't, that's okay. By now, most of you know that investing always comes with some sort of risk. Some low stakes, some higher stakes. Okay, Bitcoin being on the stock exchange isn't going to be any different. You can think of it on the stock exchange like another currency element, as I like to call them, but they are better known as commodities. I call them currency elements because each of these commodities is at some point a big staple in worldwide society, and it may have a history of being treated like currency. Like you could use it and everyone would always accept it. You know, even in bartering times, if you had this, people would accept it because they could get whatever they want trading that, if you had it. We're talking about things like gold, oil, sugar, lumber, coal, commodities. Commodities are also regulated on a separate level regarding trade that is outside of the stock market. A lot of things are regulated by multiple, I guess, organizations or agencies, depending on all the categories that it also is in. Everything on the stock market isn't regulated by the FTC? The FTC or the FRTC, something like that. I'll put the real name here. Everything isn't regulated that way, but I feel like Bitcoin will probably end up getting regulated by that if it becomes a more widespread public trading thing on the stock market. I believe the SEC is actually fighting for that, like saying that they are securities and they need to be regulated if they're going to be sold in the United States. All of this is in regards to the United States stock market, by the way. So anyway, every time you buy something on the stock market, you know you are investing in that company, meaning you are backing that company with your dollars. Now, things like gold or coal or diamonds don't have a general company on the market. There's a lot of little firms that mine those things on the market, but also the commodity itself is listed on the market. Like gold is definitely listed on the New York Stock Exchange, or NASDAQ is definitely listed on one of the stock exchanges. Does anybody call it NASDAQ? I do because it's easy. I'm not going to be like NASDAQ, what, DAQ? The stock market is really supposed to be a general reflection of the society's priorities, because the things that get the money, the things that get investors, the things that make money are the things that have a higher value on the stock market, and they get a higher value when more people buy from them or invest in them or, you know, trade with them or whatever. So same with Bitcoin. It is a company mining cryptocurrency. So Bitcoin is starting to become, sidebar, Bitcoin is starting to become like Vaseline or Kleenex. No one says, do you have any acetaminophen? They're like, do you have Tylenol? That's what Bitcoin is starting to, or I guess already is. Like, people say Bitcoin and immediately think of all cryptocurrency instead of just thinking about it. This is a certain firm that mines cryptocurrency. It's like any other mining firm being on the stock market that you would invest in. And so obviously it comes with a lot of risk. Right now it doesn't look like it's going to collapse. It's at $42,000. It could exponentially grow, but things happen every day. It could also crash. You're simply putting your money behind the company that is on a regulated system, aka the stock market. So how is the stock market regulated, and why? And why would Bitcoin, one of the front runners of cryptocurrency, who coined the idea of deregulating currency, join the stock market? Long story short, money. The more people they can get to buy into their company, the more their company's worth. It increases its value and can subsequently increase the owner's profit shares. Everything's always more complicated, but there's always a baseline, right? And the baseline is money. It's not easy to get on the stock market, so no one's going to be doing that just because. You're looking for an increase in investments. You're looking for an increase in revenue. You're looking for an increase in profit shares, okay? Another aspect to it I thought of was that it may help legitimize cryptocurrency. But I'm sure it can lead the way if other cryptocurrency firms wanted to follow suit. Like somebody like Ethereum, who is also a really high priced one, who probably has the money to do so. That's my theory. It becomes something tangible inside the US, tangible inside the US system. It becomes something that can be negotiable outside of cyberspace. So it becomes something that you can actually associate with real dollars instead of having to go through the digital wallet process, which maybe some people are more uncomfortable with. The whole idea of what I've heard people say, buying something that doesn't exist because it's over here in this unregulated area where it's the Wild West. And some people are adventurous that way. Other people aren't. And I think for the people who do not want to take those kinds of Wild West risks, having it on the stock market might feel a bit safer. It depends on how you feel about the stock market as well. Some people still think the stock market is still like bully meets bully. So rewind, back on topic. If the good part is the case, it can help regulate, it can make it look more legitimate to say all that is the case. Why aren't more cryptocurrencies scrambling to get on the stock market? Maybe they are, but you can't just get up and be listed on the New York Stock Exchange. The amount of things you have to do to get on the or I guess have in place to get on the stock exchange. Or you know what? Let me read it as I run it, okay? You need company name, ticker symbol, reservation, executive office information, CEO, contact info, listing agreement, officers and directors worksheet, corporate governance certification, underwriter letter, various SEC forms according to market and listing, a statement of understanding. Not to mention, you have to initially qualify by attesting to specific standards, such as a certain number of shareholders, publicly held shares, a certain market value of publicly held shares, certain amount of shareholder equity, global market capitalization, adjusted pre-tax income, revenues, operating history length, and more. The more includes, you guessed it, money. From what I saw when I Google searched it, it said it was $295,000 for the initial listing fees, and that did not include the annual fees, the listing or delisting fees, the trading fees, the brokerage fees, or whatever, all the different fees. A lot of crypto might opt out because it would include doxing their company structure. It would include doxing their executives, the owners, shareholders, major shareholders, I should say. Basically, how much they have, like how much they're making, their revenue. You have to expose all of that when you start publicly trading. So a lot of cryptocurrencies might be like, no thanks. And these are all things that the crypto world is like aiming to avoid. Like they want full opacity. And the New York Stock Exchange wants transparency, because part of public trading regulation is unsheathing who is behind the company that people are investing in. Remember to vote purposefully in the shareholder polls, by the way. Cash App is really good at giving you a notification saying that the investor, you know, the shareholder voting is open or whatever. All this brings us back to the original question that honestly I only got asked a few times at work. Like there were some, like every once in a while somebody will pop up and ask about like stocks and regulations. And it's how is the US stock market regulated and why? Obviously I'm like paraphrasing the question. So let me sit back. Why am I sitting so close to y'all? Y'all uncomfortable? There's actually a couple organizations that regulate the securities industry. I'll focus on the ones that deal with the New York Stock Exchange. The New York Stock Exchange is the one where people don't need a dealer to make the buy and sells for them, so it's more accessible to individuals. And they are regulated by the NYSER. NYSER. It's easier for me to say NYSER. And they also the SEC, so they're regulated by two major organizations. So both NYSER and the SEC enforce compliance with federal regulations dealing with securities and monitor the listed companies for said compliance. To explain compliance, I'm gonna just read what I wrote. Compliance with rules that address where stocks can and can't sell and sell stock and why. How companies can distribute stock shares, what information listed companies must share and how, blah blah blah. And also doling out the appropriate repercussions for non-compliance. They say it's to make sure that the trading done on the market can be seen and pronounced as just, equitable, and encourages free and open markets and protects investors and public interest. So they want to make sure it's not a shit show. I think before, certain acts have started passing since 1933, and every year, I guess it's go as they come. I would say they start making acts to these securities laws because things change and things grow every day, and they need to make sure that it's not a shit show. Your next question, after I've explained all of that, is all this regulation, does that mean that with it being on the stock market, is Bitcoin the safest cryptocurrency to invest in? Short answer, no. It's still a risk. Every time you invest, it doesn't matter how much or how little you are risking that money. It's like legalized gambling, and you're betting on these companies. It just means that Bitcoin now has to play by the rules. It means that Bitcoin has to expose themselves. They've agreed now to expose themselves to a certain extent so that you can feel more comfortable putting your money where you can actually see who it is and where it is and what it's doing. In cryptocurrency world, digital Coinbase, where you can also invest in different cryptocurrencies that don't cost anywhere near $40,000. They don't have to show you any of that stuff. You just buy it on faith and hope someone doesn't shut the coin down and run away with your money. Isn't somebody in jail? But the thing is, someone could kind of do that on the stock exchange, but the regulations make it very, very difficult for you not to find out that the shutdown is coming. That's the whole point of the regulations. I said its risk factor is still high because cryptocurrency is still such a Wild West category. People are exploring and learning about it every day. People are becoming criminals over it every day. People are frontiering into it every day. And without a tangible benefit or a wider spread base of consumer, it is still a bit financially tabooish. But that doesn't mean stay away from it. It just means go into it with both eyes open, as the saying goes. And if you want to invest, okay. And if you don't, okay. There are multiple service apps that help you buy a fraction of a stock. Okay, and that's just some of them. If you don't like any of those, I'm sure if you just type in Google stock trading applications. That's what app stands for, in case somebody didn't know. And I'll see you next time. I forgot what my ending is. It's fine. Bye.